Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with Dan Petersen, product manager at IndexIQ. Dan, thank you for joining today.
Thanks for having me, Doug.
I want to talk a little bit about the international markets. It seems like a lot of headlines, tend to focus on the US, but there is a lot happening in the international markets. What are you talking about with advisors right now?
I mean, there is no lack of international risk and international things happening right now. We're seeing a lot of geopolitical stuff happening out there right now. But interestingly, most people, most advisors, most investors have been invested heavily in the US, right? They really have gone light on their international allocations. So one thing we've been talking a lot about is increasing that allocation a little bit because valuations are attractive. You have a lot of things going. Even internationally, what we're seeing is recession might be happening sooner there than here, which means there might be opportunity outside the US before there's opportunity inside the US going forward.
And let's stay on that topic for a bit and talk a little bit about, you have an ETF, HFXI. Tell us a little bit about it.
So HFXI is very much like other international ETFs. It's broad-based, it's market cap weighted, so you're pretty much getting access to the international index at a very inexpensive price point. So we're very competitive in that stance in terms of providing broad international exposure.
So for the, again, ticker symbol HFXI, where does it belong in a portfolio? How should an investor be thinking about it?
So again, for international exposure, it's a very core piece. What you're getting there is a blend of international equity exposure, ex-US, ex-Canada, and pretty much for a broad allocation, you want something standard as a core of the portfolio to have that international allocation. HFXI is a great place to do that. And then you can satellite around with any active management that you like. You know?
So one of the things that always comes up when we think about international is a lot of the different markets with respect to currency. So how do you tend to think about the currency, exposure, et cetera?
This is where it gets interesting. So HFXI, like most other ETFs out there, is market cap weighted, international broad access. Most people realize that when you go international, you accept currency risk for what it is. And currency risk can be pretty detrimental at times. 2022, it doubled the downside. It's pretty rough. There are times where currency supplements your return though. So sometimes you want it, sometimes you don't. To have full exposure and just accept it for what it is can be detrimental at times. So what we do is we provide a 50% exposure. We reduce the impact of currency by half, and what you're getting are the benefits when you want it, and when it's not good for the portfolio, you have less downside. So in the end, you have lower volatility, but you still have broad access to those equities.
Okay, and guess what? We've got some track record. I mean, you're coming up on a 10-year anniversary of this ETF. How's it done? How's it worked? How's it stacking up?
Yeah, exactly as it should, right? Lower volatility, you have pure access to those international equities. So what that looks like is better return per unit of risk out there. And that's what most people like to see. So we want a smoother ride for the similar returns at a good price point. It makes a lot of sense.
So we're live, we're doing the deep dive on HFXI. Of course, you can go to our website, etfcentral.com, and type that ticker in, you'll learn all about it. But you can also look at the rest of the IndexIQ lineup. You don't have to remember all the symbols. You just go to etfcentral.com, type in IndexIQ, you're gonna get the entire lineup, all the information about IndexIQ, all brought to you by none other than the New York Stock Exchange, the home of ETFs.